please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The final piece of the earnings puzzle is out. WilliamsSonoma's results are in, and Courtney Reagan has them for us now.
It always feels so good to be the one to put in the last piece of the puzzle, so I'm going to do it for us right now. Kelly, the Williams-Sonoma earnings out for the third quarter, coming in line with expectations for the bottom line at 84 cents. Revenues just slightly beating at $1.3 billion. Analysts were looking for $1.29 billion. Comps stronger than expected, up 3.3%. The street was looking for an increase of 3%. When you look at the individual brands, remember, Williams-Sonoma owns Pottery Barn, West Elm, also its namesake brand. Pottery Barn comps down 0.3%. The street had actually expected that to grow slightly by about 1.6% for the comps. So Pottery Barn disappointing. West Elm much better than expected, up 11.5% for those comps. The street was looking for those to be up by more than 8%. The fourth quarter earnings guidance, though, is a little weak here. Kelly, back over to you.
Thank you, Courtney. And Mike, that's the only explanation when you see a stock down 9% like that.
Yeah, I would have expected there was at least a potential for a bit of a short squeeze moment here. The stock's near its low. It's got a 24% short position, but I guess not good enough. And West Elm's really been the only thing working well consistently at that company for a while.
Very good quarter for West Elm, but Williams-Sonoma's down about 9% right now. It's time for a CNBC News update. Let's get to Sue Herrera. Sue?
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. Former Homeland Security Secretary and Pennsylvania Governor Tom Ridge is in critical condition in a Texas hospital. This after undergoing an emergency heart procedure. He served as governor for 6 years before becoming the nation's first Secretary of Homeland Security. A new effort to speed up those slow security lines has arrived at Chicago's Midway Airport. Previously, passengers would wait in line to take a tray for their items, like we do at many airports, but now there are 4 separate divesting stations, so trays automatically pop up, and 4 people can put their items in the trays all at once. The Russian Defense Ministry releasing video that it says shows Russian bombers launching an airstrike against ISIS fighters in Syria. It described the strike near Abu Kamal in eastern Syria as massive. And the movie Titanic has been set for a 20th anniversary re-release, starting December 1st in 87 AMC theaters. It's going to be shown in 3D in 20 locations. The blockbuster won 11 Academy Awards and grossed $2.18 billion worldwide. That's the news update at this hour. Kelly, back to you.
Maybe my parents will let me go this time.
Yeah, you were young at that point. So.
PG-13. Sue, thank you very much.
You got it.
Let's take a quick look at how we did finish on Wall Street today. Dow up 187. Strong gains for everybody, though. The S&P higher there on the close by 21. The Russell was up 23, and the NASDAQ was up 87 today. Let's check on some of these earnings movers now, and there are some big ones. Gap Brands up more than 6%. Ross Stores up more than 7%. Applied Materials has moderated its decline. It's just fractionally lower right now. And Williams-Sonoma, as we just mentioned, down 9%. Let's get to some of the other big stories today in our rapid recap.
Wisconsin's Ron Johnson is the first Republican to come out against the tax bill.
Revenues increased in the federal government by $1.2 trillion with meager economic growth. We should be focusing on economic growth, and right now, I don't think this tax proposal does that enough.
Walmart putting up another strong quarter on what the company calls broad-based strength.
They placed a lot of bets to be able to stop Amazon. There's only one company that can, it's this company, and I really like them.
Jeff is going to be the most disruptive.
He already is. Bezos, you mean?
Yeah, as the Death Star moves into striking range of every industry on the planet.
Every generation has had to reinvent the relevance of Coca-Cola, and it's now our job to reinvent Coca-Cola for this generation, whether that's the way we engage with them on social media, or the smaller packages, or the reformulations. We can find ways to keep growing.
I own a ton of stock. I believe in the company for the long term. This is a great team, and I'm fully confident that this company is going to thrive in the future.
The House does have the votes to pass this tax bill. It will be official once they bring that gavel down.
Today was a major step forward. This is certainly not the last step in our tax reform journey.
Been a busy day, and there's still more to come. We're just hours away from Tesla's big reveal, a reveal that, as Elon Musk tweeted, could, quote, blow your mind clear out of your skull and into an alternate dimension. At 8 p.m. tonight Pacific time, the company will reveal its electric semi-truck. Joining us to debate whether this will be a game changer for the stock are Jamie Albertine from Consumer Edge Research, who's our bull. Taking the other side of the debate is Gabe Hoffman from Exceptor, sorry if I messed that up, Capital Management. Guys, thank you very much for both being here. Jamie, first to you. I saw another analyst on the street today who thought that this truck would be a non-event for Tesla in terms of revenue and earnings, and he's fairly, optimistic on the stock. Why are you so bullish? What do you think are the fortunes of this truck potentially?
Yeah, and thank you for having me, first and foremost. I do think this is a little bit of a non-event, unfortunately. I think it's important for Tesla to continue to remain on the cutting edge of innovation and showing how electric powertrains have, first of all, come down a lot in price and have improved a lot in development. And so now it's about applications of those electric powertrains, and Tesla wants to box out as best as it can in as many segments as it can. And this is a first foray into the semi-truck segment. So I think it's important from the long-term trajectory perspective, but short-term, it's about the Model 3, and that's probably going to weigh on the stock, I think, more than tonight will.
Gabe, do you think the launch of the truck could make it harder for the bears here going forward?
No, I think it's just another money-wasting Elon Musk pipe dream project. Frankly, today's diesel trucks get about 1,000 miles per refueling. One of these trucks with a weight of about 80,000 pounds of cargo, when you get the batteries in and everything, you're no more than 200 or 300 miles of range tops, and that's under ideal driving conditions. Really, you need to cut that in half for short haul, sort of like city versus highway driving on your car.
But Gabe, if in fact it is the case that this isn't going to be the make or break product for the company, how long do you think investors are willing to kind of, to some degree, look beyond the production delays on more of the mass market attempts, the Model 3?
Well, you'd have to ask Jamie about, ignoring facts and looking to the future, because I've gone over his research over the last year or so. His price target's gone 270, 300, 330, 385, yet his loss estimates increase and his future earnings get pushed further and further out into never, never land in the future. So I don't really understand it, but maybe he could explain it better than me.
Well, Gabe, I would be happy to. It sounds like that was a direct a question. So I would be happy to, Gabe. Look, 5 years ago, there was a lot of speculation as to whether or not Tesla can manufacture a successful luxury sedan, and 5 years later, it's one of the most successful luxury sedans on the market after 5 years of being on the market. Porsche, Mercedes, BMW are taking a very close look at that. They've changed the game in a very short period of time, and we expect the next stage with the Model 3 will take it even further into a market not only dominated by Audis and Mercedes and BMWs, but also those of the Toyota Camry, Honda Accord, and so forth. It costs a lot of money to build vehicles, and GM and Ford will tell you not all vehicles are profitable, not all vehicles sell well, particularly when you are banking on your first, second, and now third vehicle. So we believe that the success of the S, the X, and various other projects that they've endeavored on gives a little bit more benefit of the doubt than I think you're giving them credit for, and that is captured in our both short, medium, and long-term models.
Gabe, by the way, I don't know if you saw this, but Elon Musk said Tesla's short sellers are jerks who want us to die. You want to comment on that, too?
Well, it's nothing personal. It's a financial investment. Stocks are supposed to be something financial, which means you look at the balance sheet. In Tesla's case, it's a disaster. Over $20 billion in liabilities, debt from convertible debt to straight debt to hawking almost all their property, plant, and equipment and credit lines. It's financial. It's not personal. But I'd really like to understand how somebody can claim to be an honest analyst when they've raised their price target almost 50% in a year, yet they're slashing their estimates. I just don't understand how that works. It's kind of a simple question.
Right. Well, we're out of time, so we'll let you guys get out. Thank you both for joining us, Gabe Hoffman and Jamie Albertine, on the always controversial Tesla. Speaking of controversial, we have a news alert in Venezuela. Michelle Crusoe Cabrera joins us by phone. Michelle, what's going on?
Hi, Kelly. The organization that decides whether or not credit default swaps should be triggered have decided that in the case of Venezuela, indeed there should be CDS payments. You may recall that Venezuela's oil company had a big billion-dollar payment due back November 2nd. They said they had started to transfer the money, but remember, the country is facing a lot of sanctions, so they had moved the money, apparently had moved very, very slowly through the financial system, much more slowly than would normally be the case, and that's due to compliance situations, et cetera, when it comes to banks. And as a result, a lot of the holders of the bonds who were supposed to receive the money didn't get it on time according to all of the rules written into the bond. So it had created this ambiguous situation. Venezuela said they had paid, yet people hadn't received the money should the credit default swaps, the insurance bought, be triggered. 4 times they delayed the committee, and then finally today, this afternoon, they have decided that because the money did not arrive by the end of the grace period written into the codes of the bond, they were going to trigger the credit default swaps. So people who bought those bonds who bought those swaps are going to get paid.
Michelle, just because of the size of this debt, I mean, this is bigger than Argentina, right? The Venezuela default. This is one of the biggest. They have $150 billion of debt, right? I mean, this is not a small event. This is not a small country, financially speaking. The IPO of clothing delivery service Stitch Fix is set to price any moment now. And if you're not familiar with it, users pay a monthly fee of $20, and a stylist works with your preference to deliver items of clothing, which you can buy, and then you send the rest back, and the $20 then is a credit that go towards. But $20, I'm like, look at what's in mine. That's not going to go far.
$20 is just for them to pick the stuff out.
Yeah, but
then
once you buy it, you get a credit. These are
Yeah.
rag and bone jeans here. This is like a really nice leather jacket. Okay, this
Somebody
thing must
knew
be...
you who wrote this, punched up this profile.
No, this is just a generic example of what you can get. A nice sweater. But I'm telling you,
I'm not crazy about
the. This is expensive. What is that? That's for you?
You can have it.
I think I might wear this. So you get it sent, and then you get to decide what to keep and what to send back.
Yeah, I mean, this is...
Look at the size of this thing. That's a really nice
It is
farmer
actually a nice jacket, yes. This is
Holy
like
cow.
if I hunted or something, a fox hunt. Yeah.
Or if you just needed it in the New York City weather. Now that we've seen these clothes, Leslie Picker is here with a look at the public offering details, the numbers. Leslie?
Well, Kelly, I certainly like that leather jacket for you. That's a good look. But this deal may be a little less colorful than the actual clothes. There were indications as early as this morning that it would price below the range. The company has been marketing 10 million shares for $18 to $20, but the Wall Street Journal says it will now be between 15 or 16 a piece. And at the low end of that range, Stitch Fix would be shaving about $500 million in value off of what it was initially targeting. And speaking with sources close to this one, a few things turned off investors. CEO Katrina Lake planned to sell 1 million shares as part of the deal, and optically that's a concern for investors. Why is she selling when I'm planning on buying? Does she know something that I don't know? Additionally, the business model is similar to Blue Apron, which went public back in June. It's now trading at less than a third of its IPO price. Investors who lost money on that deal are less inclined to jump into another. I also heard that there was some skepticism surrounding the company's growth projections used to justify the valuation. And while top-line growth is slowing, the company has managed to achieve almost $1 billion in sales in the year through July. Stitch Fix posted small losses this year, but has been profitable in 2015 and 2016. Now, the company is expected to begin trading tomorrow and will be listed on the NASDAQ under the symbol SFIX. Kelly.
Yeah, it's a tongue twister for me,
It really
Leslie.
is.
Thank you. We'll
Thank
see
you,
what the
guys.
numbers do come in as. Leslie Picker. Joining us now, David Strasser from Swan and Legend Venture Partners, and Kathleen Smith, who's on set with us from Renaissance Capital. Kathleen, there are reports that they're going to price this below the range. 18 to 20 was, I think, what we were looking for. Dow Jones was saying earlier, maybe it's a couple bucks below that. What do you think about the fundamentals for this company?
Well, I think we have to give the company credit for reaching $1 billion in sales and being positive cash flow since 2014. And that's not an easy thing to do. So, and 2.4 million customers, and they've solved the real worldwide problem of enabling customers to find jeans that fit. So we're impressed with the fundamentals of the company. The issue is what is happening going forward. They're going the easiest customers they've already acquired. Now they have to spend more and more to acquire these new customers. So that's the issue.
I hate to jump in because this is such a good story, but there might be an even better one breaking right now. It's 21st Century Fox. Maybe some deal rumors or news out there. Sue Herrera, what's happening?
Kelly, right now, Dow Jones is reporting that Comcast, which is the parent company of our company, has approached 21st Century Fox, expressing acquisition interest. This is according to unnamed sources by Dow Jones. It is unclear whether Comcast is interested in buying all or part of Fox, according to Dow Jones, citing once again sources. As you know, our David Faber has been following this as well, and bear with me, CNBC has now confirmed that Comcast has approached Fox to express acquisition interest. We have two sources on that. So CNBC has confirmed that our parent company, Comcast Corporation, has approached Fox to express acquisition interest. Now, Julia Boorstin has reached out to Comcast. David Faber is working on it as well. So we have our team working on it, Kelly, but we have confirmed that Comcast has approached Fox to express acquisition interest. What is unclear is what part of Fox, either all or part of, Comcast might be interested in. I'll send it back to you.
Sue, thank you very much, Mike. This is really interesting.
Certainly.
So just to rewind the clock back a couple of weeks, there was a report that Disney was looking to buy the assets, the entertainment assets of 21st Century Fox. Now, that would leave potentially the news and sports.
It would leave Fox News.
No, not sports. It would leave news.
No, also sports.
Would it be sports? Okay.
It would leave Fox News, Fox Sports, as well as the Fox network television stations. Yes. But it would take the studio, Fox 21st Century Fox studio, as well as the TV production business.
And when David Faber broke that story a couple of weeks ago, he did mention,
and
look,
FX, the cable channel.
Yes, and he said, look, these talks are not currently ongoing, but of course, once they're started, and we saw an immediate reaction. Actually, it was 21st Century Fox and Disney both moved higher on this, and then we heard nothing from Disney on the earnings report, nothing really from 21st Century Fox on the earnings report. But it was the sense that if this is on the table at all by the Murdochs, who might be next in our parent company, reportedly. Investors
absolutely read that news that David broke as, okay, the Murdochs are potentially a seller. They're entertaining. They're trying to figure out where their assets fit in the big scheme going ahead, and therefore who else might be out there, even if it's not Disney.
Julia Boorstin joins us now with some more color on this. Julia?
Hey, I think it's really interesting, Kelly, just the fact now that it seems like everything is in play. Once those reports were out, once David Faber reported that Fox was in talks with Disney, it becomes clear that Fox, which is a controlled company controlled by the Murdoch family, which controls about 40% of voting shares, that was news that they were interested or at least open to selling. And I think that was a surprise to many people. But the fact that they were open to selling means that now there are going to be other potential buyers on the table. And if you look at what Comcast has done with its acquisition of NBC Universal, integrating sort of that vertical integration of distribution and content, it seems like there could be more room to go with content, especially now that there are so many different buyers for content, especially from the tech companies.
At the same time, Julia, we also have the AT&T Time Warner deal that there reportedly may be government pushback on, and they will cite the Comcast NBC Universal deal as a way of saying, hey, you let that vertical merger happen, why not us? So I only raise it in the sense that if this is now changing, the kind of light that's being shown on this deal, would it be less favorable in this regulatory environment? Because there's a sense of, well, if we are not going to let AT&T and Time Warner go, we shouldn't let Comcast double down.
Absolutely. I mean, ever since David reported that news of Disney being interested in buying Fox, there were questions about sort of how likely this was to happen. I've been talking to a lot of people in the media space, people here in Hollywood, and it really seems like the likelihood of that deal going through really hinged on how easily the AT&T and Time Warner deal was approved. If that's going to be a laborious process with a lot of lawsuits and a real headache to get that AT&T Time Warner deal approved, then that's a much higher bar for any other media deals out there. And I think in order for a Comcast Fox tie-up to happen, you would need to have the AT&T Time Warner deal go through as an indicator of sort of an openness to M&A in the space from the DOJ. So I think everyone's going to watch to see what happens with AT&T Time Warner. And it's also possible that perhaps Comcast could be interested in buying only part of Fox, not all of it. So as we saw with the Disney interest, Disney wasn't talking about buying all of Fox, only certain of those assets, the entertainment assets, which would give Disney more strength internationally. Comcast, you have to remember that the Comcast cable business, that's a U.S. business. So there's been speculation for a long time that Comcast could be interested in assets that would give it more global scope.
Yeah, maybe one or the other or both of these could happen. Julia, stay right there. 21st Century Fox shares up nearly 6% on this report. We're going to have much more breaking news on this potential tie-up between that company and our parent Comcast when we come right back.